Hi everyone. So now that I've covered the tools that I use for my trading analysis, be sure to check out my previous videos. I'm gonna go through in this video some higher time frame market analysis to get a big picture view of what's going on in the markets. Alright, so let's start off here with Bitcoin. What I mainly trade based off for crypto. Now when we look at Bitcoin, it's easy to say that we are in a bear market now. In fact, we just need to look at how everyone is feeling, how everyone is performing on their portfolio. It's obvious that we're in a bear market, but how do we look at that on a technical basis, right? So if we look at the halving cycles, okay, so what I'm doing here is every 4 years there's a halving cycle, and Bitcoin price seems to perform or move in a similar way, throughout these 4 cycles repeatedly. Okay, so over here I have the current price in the normal candle chart, and then the green one is the 2013 cycle, and then the blue one is the 2017 cycle. So if we line it up from the low of each cycle, this was the low of the 2020 cycle that we're in right now. Okay, you can see that price moves quite similarly until here, where a lot of people, myself included, was expecting price to go literally off the charts. Okay, in case you're wondering, I'm in log mode here. It makes it easier to look at charts of parabolic moves like what Bitcoin has done in the past. Okay, so over here towards the end of last year, a lot of people was expecting Bitcoin to reach at least 100k, if not, some models were predicting 188k, 200k, and so on, but it didn't. Okay, and then it started to fail. So I would say that this high right here is the cycle high for the 2020 cycle, and the first sign of that was actually when we broke this final wave trend line over here. All right, so 3rd of December last year was actually the first sign that this cycle was over. I mean, the high was set in. Okay, and the confirmation of that is if you draw this channel over here, connect the two highs, and then you clone it down. Okay, you got the lows here, here. Again, some, myself included, we were expecting a bounce from here. It didn't, it broke down. This was the confirmation that we're now in a bear market. Okay, so now that we're in a bear market, are we, what do we do? Are we going to sell? And how low can we go? Right, so I will compare past cycles and what they have done with reference to the halving date of Bitcoin. You can go check out, for those who don't know what halving means for Bitcoin. I won't cover it here. Okay, so in the 2013 cycle, after the halving happens, price went parabolic. There was a first pump, a pullback, and then the next pump to the cycle high. That took about a year, 364 days. Okay, and the returns was about 9,400%. Okay, and the drop from the highs was a brutal 87%, and the drop took also a year plus 413 days. And then the next cycle, 2017 cycle, after the halving happened, yes, there was a profit taking dip, and then it started to rally from there. From the halving, we had about 500 over days of rallying, almost a straight line up in the 2017 cycle for about 2,900% return, and then also an 80+% dip, 84% dip from the high, and it took also about a year, 364 days to find a bottom. So what happened in this current cycle, 11 May 2020 was the halving. Since then, we made a high in 500 plus days, 546 days, and about 700% return. So it seems like the cycles are getting slightly longer. I should say the bullish moves after the halving is getting longer. So 364, 525, and then now we have 546. Okay, so assuming this is the cycle high, you know, and we extrapolate it out and say that the low can be found slightly longer than this. This was 364, so about 400-ish days over here. And then the low, so how do we figure out the low? There are many ways. What I will do in this video is I will take the Fib extension tool on the log scale and draw from the high to the first dip and then the big retracement here. Sorry, this one over here. Okay, first dip, major dip, retracement. The same length of this dip from this swing high here is approximately the low. Okay, some overshoot. All right, if we do the same for the next cycle, from the high to the first swing low, and then the retracement, you get a level over here as well, 3,500-ish. It's close to the bottom of that cycle low. So now, if we do the same for the current cycle, we are actually pretty close. Okay, from high to first swing low and then the swing high. So you take this length and extend it out from this swing high here. On the log scale, you get about 23,000. So we expect some overshoot of that. So, you know, I would say a range between 20 to 23,000. That's what I'm expecting for this bear market low, and we'll probably find it you know, about 400 plus days from the high. So that's late this year or maybe early next year, right? And in between, how we gonna get there? What I look at is the bear fractals. So let me close this off, take this away. Right. Okay, a bit messy here. So this is assuming the high has been formed. What I did is let's work with it one by one. The 2013 fractals. So from the high of the 2013 cycle, how price reacted. This is more or less what happened. Big dip, rebound, another dip, rebound. And then now if you line it up, we are kind of at this dip here and we're expecting a bounce up. Okay, but overall, we're just gonna chop around and then find the next low until we build up for the next cycle's bull run. Okay, and if we pull the 2017 one as well, it seems like we have overshoot in terms of price to the downside, but the shape is more or less similar, and also expecting a bounce up from where we are right now. And then we chop around for the rest of the year, maybe take one final dip to 23,000 or 20,000, and then we find a bottom from there. Okay, so you line these two up. This is more or less what I expect to happen for Bitcoin. Okay, so a lot of choppy action, really difficult to trade. So what's driving all this bearishness, and why didn't we get that parabolic move up towards the end of the cycle? So right now, what the market is looking at is inflation and interest rates. Right, so let's take a look at interest rates first. A commonly looked at one is the 10-year interest rate of the US Treasuries. Okay, so generally, the higher the interest rate, the worse it is for risk assets. The lower it is, the better. Because let's say for the stock markets in general, when interest rates are low, it's easier for companies to borrow money to grow their business and do better. Right, so what we have here on the US 10 years, since the 80s, if you look here, we have had a downward trend of interest rates. So money has been easier and easier to borrow for companies, which is why we've had many years of bull run for the equities market. And over here, we can see a very nice downward channel that was formed, and we have recently broken that. So first warning sign was here in February. We broke the first trend line, and then the top of the channel, we broke it in April, and we shot straight through for 1, 2, 3, 4, 5 weeks in a row. And right now we are testing some resistance over here, which was a monthly resistance in 2018. Okay, so we've pulled back for 3 weeks now. I'm expecting it to bounce around and pull back a bit further until we retest this channel here, or we come all the way down to test this trend line here. Okay, so we'll see, but this is actually good news for the markets in general. It will be bullish for stocks and crypto. Right, so another interest rate we can look at is the 2-year Treasury. Okay, so similarly, since the 80s, we've had a downtrend all the way. A false breakout here. Okay, there was some liquidity event that happened in 2018. All right, but it was very quickly beaten down. Okay, but now 2-year interest rates have shot right up again. Okay, so why look at the 2 years? It is usually used as an indicator for Fed policy. So the 2-year Treasury market seems to front run or anticipate what the Federal Reserve is going to do with potential rate hikes or rate cuts. And if we put it in over here, this is the effective Federal Reserve rates. You can see that throughout the years, they move almost in lockstep, right? And usually on the way up, the market interest rates will lead the federal fund rates. So if we apply that here, there is a huge disparity. So we do expect the Federal Reserve to hike rates for at least 2 or 3 more times before we match up to what the market is expecting. All right, so a little bit mixed here, no clear signals in terms of the interest rates. Now, moving on to inflation, the oil prices is, I would say, a good indicator for inflation. The whole world right now is feeling the pinch of inflation. Everything is going up in price. And if we look at oil, oil price has shot through the roof, especially since the Russia-Ukraine war. And oil drives every industry, right? Everything we do, every industry we run, from manufacturing to transport to power generation, we all need oil. So if oil price goes up, generally the price of everything goes up. And that's one of the big drivers of inflation. Of course, there are other factors as well, right? So now looking at oil, WTI specifically, not a lot of people are talking about this, but there is a huge channel over here that we've been trading since 2008. So before the Lehman financial crisis, this was the high, and we have formed this huge channel here, and we have very nicely tapped the top of that channel and retraced down. Okay, because there was an overshoot here, this was the COVID crisis, I do expect price to overshoot and then come back in again this year, right? And we could see this price come all the way back down to, you know, 10 plus $20 for oil, right? And how this is gonna happen, you know, everyone may think that it's impossible now, but think about it, everything is so expensive now, and slowly it will start to affect all our spending habits, right? Instead of living luxuriously, we may eat more simple meals, buy less stuff, and consumption comes down. The decrease in demand is going to drive oil prices down. So the next recession or crisis that comes may have been caused by inflation at the start, but I believe it may well be deflationary in nature. Okay, lastly, let's move on to the Nasdaq. Right, I use the Nasdaq to give some direction to the crypto markets, since Bitcoin for now is considered a technological growth asset, and they move quite in line. Okay, so what has been going on in the Nasdaq? Let me tidy up the charts a bit first. Okay, we had this nice channel here, upward channel, since the November 2020 elections. Okay, that failed, so it broke down. There was a retest and then failed, so that was a confirmation that this trend is over. And then it went down and then tested again and failed. Right, so but if we look at price and the Fibonacci levels from the March 2020 lows, and we pull all the way to the high, price has very nicely respected the 2 Fib levels. So over here, we have the 382 Fib in line with the 2021 yearly open. You know, price made a nice rally on the Nasdaq that is about 17%. Okay, from here, and then we came down here. This is the 50 Fib. It's also in line with a weekly support here, and also the extension of this move up here. So the golden ratio extension. So 3 different factors here, and price held very nicely. Okay, so I'm expecting this bounce to, hold on, before that, let me pull up. Okay, so from this swing high to this swing low here, I'm expecting this bounce to come up and test any one of these Fib levels, okay, before deciding on the next direction of the markets. So in terms of catching this low, I did post this out on Twitter, so do check it out on my profile. It's pinned up there for now. And yeah, so price coming up to these Fib levels, before we decide whether we want to break out of this trend line over here, or if we're gonna hit this trend line and then roll down and continue lower and maybe test this golden pocket 618 fib over here, or we can even go all the way down to this 2020 yearly open, in line with this 786 fib. That would be scary. For now, that's not my base case, because if you look at that from the high, that will be almost a 50% drop on an index, which is not going to be pretty. Alright, so for now, I'm expecting price to trade up here, probably hit some resistance here at the yearly now turn resistance, and 382 fib, 50 fib a little bit, 618 fib, consolidate here for a bit before we break out higher. So that's my base case, and that's how I'm going to trade it. Okay, but we'll see what price does along the way. So thank you for watching till the end. So that's all I have for the major markets in terms of the bigger picture. I'll see you in the next video, where I'll zoom in on shorter time frame charts to look for potential trade setups and ideas. Okay, see ya.